Are you an established small business owner or aspiring entrepreneur? Would you like professional advice to help your business grow and succeed? Well, look no further. The Virgin Islands Small Business Development Center is the territory's #1 resource to move your business forward. Enjoy no-cost advising, low-cost training, and technical assistance from experts in both the public and private sectors. The VI-SBDC is nationally accredited and sustained by the University of the Virgin Islands and the U.S. Small Business Administration. Visit us at our locations on St. Thomas, St. John, or St. Croix, and follow us on social media at VI-SBDC. For easy access to all our training and networking events, be sure to join our newsletter and download the VI-SBDC app. The Virgin Islands Small Business Development Center, here to help your business start, grow, and succeed.
Good morning, everyone, and welcome to USVI Business Banking Concepts, Strategies, and Best Practices with local lender Popular. Today's webinar starts the VI-SBDC's focus on April being Financial Literacy Month. We have put together essential training opportunities to assist the public in getting both their personal and business finances in order. These tips and best practices can guide you in the right direction towards a healthy business banking relationship when planning to request access to capital with a lender. Listen as Popular VI Bank Vice President Monique Richards explains business banking and its impact on your financial future. Participants would also get an overview of the Starter Popular Bank program for small businesses. Allow me to introduce today's lead presenter, Monique Richards, a seasoned banking professional with a master's in business administration from the University of the Virgin Islands. She brings over 25 years of experience to the realm of financial literacy. Her extensive background encompasses various facets of banking, including consumer lending, cash management, credit administration, and commercial lending. Passionate about empowering her community, Ms. Richards has actively participated in numerous financial literacy outreach forums, honoring a robust and comprehensive approach to addressing financial needs of entrepreneurs within the USVI community. In her current role as Vice President, Commercial and Credit Relationship Manager, Ms. Richards leads a team of officers dedicated to providing clients with tailored financial solutions to meet their banking needs. With her extensive experience in strategic leadership, she ensures that her team delivers top-notch service and expertise to each client, fostering strong and lasting relationships. Ms. Richards continues to make a significant impact through her involvement in community service as a local Rotarian with Rotary Club of Thomas II. At the forefront of her endeavors are impactful service projects aimed at promoting financial literacy, with particular emphasis on the Teach Children to Save initiative. This program offers invaluable training to young minds, instilling essential financial skills from an early age. With unwavering dedication and unparalleled expertise, Monique Richards remains steadfast in her mission to foster financial empowerment and security, leaving a lasting legacy of positive change. With her dedication and expertise, Monique Richards remains committed to fostering financial empowerment and security within the USVI community. Here's a friendly reminder to put your questions in the chat, and they will be addressed by VP Richards either in the chat or later during the question and answer segment. A copy of this presentation is available upon email request to training@visbdc.org. We encourage you to take a few minutes after this training to fill out the survey that lets us know how we're doing. So without further ado, VP Richards, the floor is yours.
Hi, good morning, everyone, and thank you for taking the time out of your busy schedule to join us today as we get into some details on how to basically establish a banking relationship for your business needs. Today, I'm going to highlight some best practices from going into your credit, preparing to meet with the bank. And as Sharika explained earlier, I'll also discuss a program that's developed for new entrepreneurs or persons that are just starting out in business that can attain financing. So I'd like to start first just emphasizing the need for financing. Financing is an important engine for the development of the economy by allowing companies to access resources to carry out their activities, plan their future, or expand. Financing also allows you to promote economic activity as it helps individuals and businesses access resources to execute initiatives, plan their future, or expand. So as an individual, when we think about financing, we try to get financing to attain our goals, whether it's education, whether it's a car loan, whether it's for a personal investment, or if we would like to obtain a home. For a business, financing is beneficial if you're looking to purchase equipment, if you're looking to get additional inventory, you may have some working capital needs for payment of your wages and salaries to your employees, improvements to a property. It can also assist with web page designs as well as marketing. As new businesses, we do understand that marketing is an important aspect that's required, and there's financing available for that. But how do we establish good account management, find ways to prevent fraud, and build a solid savings base? Let's take a look at the credit evaluation criteria. There are 5 areas in which a lender will typically follow to determine the level of risk associated with providing a borrower with the requested funds. Areas that we look at, also known as the 5 C's of credit, is character, conditions, capacity, capital, and collateral. And I'll go into these 5 segments. The first C, character. When lenders evaluate character, they look at stability. For example, how long you've lived at your current address, how long you've been in your current job, and whether you have a good record of paying your bills on time and in full. If you want a loan for your business, the lender may consider your experience and track record in your business and industry to evaluate how trustworthy you are to repay. When we look at capacity, capacity refers to considering your other debts and expenses We also look at capital. Capital refers to your net worth, the value of your assets minus your liabilities. In simple terms, how much you own, for example, your car, your real estate, cash, and investment, minus how much you owe. And then there's a factor of collateral. Collateral refers to any assets of a borrower, for example, a home, that a lender has a right to take ownership of and use to pay the debt if the borrower is unable to make the loan payments as agreed. Some lenders may require a guarantee in addition to collateral. A guarantee means that another person signs a document promising to repay the loan if you cannot. In this day and age, majority of your lending, you would be required to have a personal guarantee. Conditions. Lenders consider a number of outside circumstances that may affect the borrower's financial situation and their ability to repay. For example, what's happening in the local economy? We live in the VI. We are a tourism-driven area. How is tourism? If you have a tourism-based business, how is the tourism industry going? This is a condition that we look at. If the borrower is a business and the lender may evaluate the financial health of the borrower's industry, their local market, and their competition. We want to know who your competitors are. What sets you apart from your competitors? Then we zoom in on your credit score or your FICO score. Lenders use this to evaluate the probability that you will repay your debt and assess the risks that lending to you could entail. By evaluating the FICO score, we're also evaluating your character. Scores can go anywhere from 300 to 850. The higher the score, the better it can give you access to better financing terms. A typical score that the bank currently looks at is anything from 650 or higher. Lenders obtain your score from different providers. Some lenders use TransUnion, they may use Equifax, or they may use Experian. Now, how is your credit score comprised? Your credit score has several areas. It has the payment history, which is about 35%. That will let us know, it spans over a period of 2 years, letting us know, did you make your payments on time? 30% of your credit score lets us know how much you owed. If you have a credit card of $1,000 maximum limit, do you owe $1,000 or do you only owe $300? The typical bank would like to see at least 2 years worth of credit history. Then we have new credit, which is 10% of your score. Are you applying for debt frequently? For example, within the last 12 months, did you apply for a new car loan and have a car loan, then you have a credit card and a mortgage? Acquiring new credit frequently is looked at and takes up 10% of your score. Then there's the type of credit used. Most creditors or banks would like to see that you have a mixed use of credit. So you may have one credit card, you may have an auto loan or a mortgage, but we want to make sure that there's a variety and that not that your whole credit report is all credit cards and you've had no long-term borrowing experience. Companies believe that the way they have handled credit in the past predicts how you will handle credit in the future and the risks that would mean having them as a customer. I'll leave you with some tips on how to manage your FICO score. 1, you must pay your bills on time. Paying 30 days after the payment date negatively impacts your score. Always pay. If you don't make a payment, your account can go into delinquency and can go into charge-offs, and that would be a big detractor from any lender that may potentially would like to lend to you in the future. And on average, maintain an average of 35% use of your credit limit. So if you have a credit limit of $1,000, again, you want to make sure that you're not using more than 35% of that and keeping that balance on your account on a monthly basis. It's also important to make sure that you're checking your FICO score or checking your credit report on an annual basis. There is a website that's called annualcreditreport.com where each individual, each consumer has the access to be able to access your credit report on an annual basis. There's also several other entities out there, such as Credit Karma, that will give you your score on a daily basis or monthly basis. I know some credit card companies now, they provide you with your credit score on a monthly basis as well, so that you can keep monitoring that. The importance of monitoring that as well is to make sure that you're not a victim of fraud and make sure that everything that's being reported on your credit report is accurate and correct. Now that you have worked on getting your credit report aligned with what the potential borrower is seeking for financing, it is time to request financing. This can be a scary part of a new business owner or someone that wants to get into business. It's scary getting ready to come to a bank. There's concepts that you may not understand, that you may be intimidated, sort of like. So you want to be able to prepare for financing. The first step in preparing for financing is getting to know your banker. There are several banks within the territory. You can schedule a meeting with one of their commercial officers and establish a meeting that would allow you to understand what are the bank's requirements, what are the banks looking for, what are the current interest rates in the market at this time. You would also want to know if the bank will have an appetite for your project as well. Establish a savings. Although there are different financing programs out there, the banks or lenders would like to see that you have invested some sort of funds in the project. There are some programs that require you establish a 20% injection into your project, and then the bank may finance the difference. And there's some areas where you can invest less, say, for example, 10%, depending on what the guarantee is for that loan. And then the bank would finance the rest. But the bank would like to know that you have as much financial investment in the game as they do. And a way of showing that is making sure that you have established a savings that will allow you to contribute to your project. Also, in the loan closing process, there are times that there are closing cost fees, which can range from attorney fees, appraisal fees, and it's important to have a savings account that will be able to cover those costs if they're not included in your financing. Number 3, create a budget and stick to it. It's very important to have a budget. Sometimes you would need to include in that budget a contingency of, say, for example, 10%, because we do know with inflation, sometimes prices can go up, which will shift your budget, but we do recommend that you create a budget and stick to it and have room in there for contingencies. Number 4, know and manage your credit score. Now that you're ready to come to the bank, before you come, we would like you to prepare your pitch. Know what problem you're going to be solving. If you have a new business venture, know exactly what problem you're solving. If you decide you want to start a restaurant and there may be 50 restaurants on the block, know that if you're going to start a restaurant, what's going to set you apart from the rest and what problem you're solving with that new venture. How have you proved to the market? How have you proved you have a market for your solution? If you're going to be offering Indian food, is there a market or an Indian community that would purchase from that restaurant? 3, what is your plan to develop the solution? Now, in developing a solution, I like to use the business model canvas. This helps you get prepared for your pitch. It is a good idea to establish the business model canvas, which allows you to jot down all of your ideas and ensure that you are covering the main areas that the bank will be interested in knowing about your plan. Main areas such as key partners, key activities, key resources, value propositions, customer relationships, channels, customer segments, cost structure,
VP Richards, just checking to make sure it's still there because no audio is coming through, so we aren't hearing you if you're speaking. Okay, everyone, so she fell off the meeting. She probably had a bad connection, so just allow her a few minutes to reconnect and share her screen. and we can proceed.
Hi. Okay, I'm not sure where we stopped. I didn't know we lost connection. What was the last screen? Sharika?
We have to bring back up the PowerPoint. We aren't seeing anything. You were
Okay.
getting ready to explore. Someone is asking if you can repeat the information on the credit history timeline because the audio had cut out.
Okay, all right, I'll go back to that slide.
Okay. So I'll let you know when we see your screen. Okay, we see your screen and you're on the slide with the credit FICO score.
Okay, yes. Okay, so I'll start from here. I do apologize, but definitely text me if we lose connection again. Okay, so as it relates to the credit score, lenders, this is looked at as your character evaluation. So lenders want to be able to evaluate the probability that you will repay your debt and assess the risk that lending to you can entail. So the bank will look for any score going from 300 to 850. The higher the score, the better it can give you access to better financing. Typically, we look for a score of approximately 650. Lenders can obtain your score from different providers, such as TransUnion, Equifax, or Experian. Your credit score is comprised of 5 different areas. Your payment history, which is approximately 35%. Now, for persons that are just establishing credit for the first time, we want to be able to see that you have a payment history or credit history timeline of 24 months. So for persons typically ask the question, hey, I want to establish credit. How long does it take? Payments consistently for a period of 2 years, it would definitely boost your score. Then we want to look at the amount owed, 30%. 30% would be based on your balance that's left on your credit card. For example, you have a credit card of a maximum credit limit of $1,000. We want to make sure that that amount or the usage on that card is not maxed out at $1,000. We want to make sure that that usage is, say, under 35%. Credit history timeline, like I said, 24-month credit history timeline, and that weighs 15% of your score. And then taking on new credit. When it comes to new credit, we don't want to see that someone's actively applying for a lot of credit. I know sometimes if you're applying for a car loan, you may go to 4 different dealerships. Each dealership will pull your credit. However, because some dealerships will pull a soft credit, which will have a less impact on your score. So if you're applying for new credit, you have an auto loan you're applying for, you have a credit card, a mortgage. Each time someone hits your credit, it takes away additional 10% from the overall score. And that's looked as your new credits that you're establishing. And then the types of credit use, 10%. Banks like to see that you have a mix. If you have a mortgage on your credit report, that's a long-term debt. So if you had that mortgage for say 3, 4, 5 years, the bank can say, okay, this person has a good character because they've been consistently making payments on this for an extended period of time. We want to be able to see that you maybe have 1 credit card, not 15 credit cards. 1 credit card is sufficient, but that you have the experience with applying and maintaining different levels of credit. So some persons have approached me and asked about the fact that I have good credit. I have a credit card. I've been paying my credit card for years. I don't have any loans and I applied for a mortgage and my mortgage was declined. Sometimes what's taken into consideration is the fact that you may have established credit for a revolving, which is a credit card, but you have not had a debt that is as large as a mortgage, as well as the length of time to be able to repay. So sometimes that is taken into consideration. That's not the only factor that's in the evaluation process, but it may have a slight impact. So tips to manage your FICO score, your credit score. Make sure that you're paying your bills on time. Paying 30 days after the payment date negatively impacts your score. Always pay. If you don't make a payment, your account can go into delinquency, and eventually the bank may charge off, or if there's collateral tied to that debt, they may seek legal actions to repossess that collateral. And if you have a charge off on your credit, this is a big detractor for lenders. And finally, maintain an average of 35% use of your credit limit. Now, it's a good practice to manage or review your credit report on an annual basis. And as such, there's annualcreditreport.com. This is a website that provides every consumer with one credit report free every year. So it's no monthly subscriptions. It's something that you can go to and request your credit report and be able to review your report and ensure that there's no activity on your credit report that's not accurate, as well as ensuring that there's no fraud that's occurring with your credit. Other entities that provide you credit score information is through Credit Karma, and some credit card companies, they provide you with your credit score free of charge on a monthly basis. Now that you've worked on getting your credit report aligned with what the potential needs are, basically, it is time to request financing from the bank. And the hardest part of requesting financing is making sure that you have the right pitch or get prepared for financing. So in preparing for financing, you want to get to know your banker. You have many different banking options. It's always a good idea to shop around, meet with your banker, get to know them, ask questions in terms of what that bank can offer you based on what your business needs are. Establish a savings. It's important to establish a savings because when it comes to commercial financing, banks want to know that you have some type of investment in the game. You have some skin in the game. A lot of times you may not receive 100% financing for your project. So we want to make sure that you can invest at least 20%, in some cases 10%. And there's some government guarantee programs that will definitely be able to fill the gap if you cannot. However, when it comes to getting approved and going through a closing process for commercial financing, sometimes there are attorney costs that are involved. So you have attorney fees. If there's property involved, there's appraisal fees, surveys, and those fees can add up very, very quickly. So it's always important to make sure that you start establishing a savings and build your savings to support your new venture. Create a budget and stick to it. It is important that, yes, you have a budget, but make sure that you also for your
Richards,
business.
your
Yes.
audio dropped off. So you were at creating a
Hi.
budget and stick to
Can you
it,
hear me?
and then there was a gap. Yeah, we can hear you now.
Okay. All right, I'll move you over to my slide so I can see you. You can hear me fine now.
Yes, we can. Go ahead.
Okay, great. So yes, create a budget and stick to it. Always ensure that you have some wiggle room for contingencies, because with inflation, costs may increase throughout the length of time that you're working on your project. So that flexibility should be in there as well. If you have projections that you're working on for your business and you anticipate on getting financing, a lot of times we see proposals and the client has projections and they're seeking financing, but in the projections, there's no interest expense or no accommodations for the funds that they're going to be lending for the bank, and that is important. 4, know and manage your credit score, and we just went over how to establish that. Now, in coming to the bank, you want to be able to prepare your pitch. What is the problem you're solving? For example, if you're establishing a restaurant and you're in a town that has 50 different restaurants, what product are you going to offer that will set you apart from all the other restaurants? How have you proved you have a market for your solution? So if you're going to start a new restaurant and you want to have Indian food or Greek food, do you have a market for that? What is your plan to develop the solution? Now, in developing that solution, I like to use the business model canvas. Now, the business model canvas allows you to jot down all of your ideas and able to cover areas that the bank will be looking for when they're evaluating your business plan. They want to look at your key partners, key activities, key resources, value proposition, customer relationships, customer segments, channels, cost structure, and revenue streams. And I'll go into each one segment. We have the value proposition. What is it that you're doing? Why is it needed? And what makes this unique for your business? When it comes to customer segments, for whom are you creating this value? In the example of the restaurant, there's a need for Greek food. There's a need for Indian food. Do we have a population to support that? What is the size of the market? Based on the size of the market, will you be able to be profitable? Will you be offering something that there's not a market? And if there isn't a market, how will you be building that market? What other products or services do your clientele or your customers want and need? Under customer relationships, you want to know, how will you establish a relationship with your client? How are you going to market to them? What media outlets are you going to reach them? Are you going to be using the radio station? Are you going to be using online media? You have to have a media that will reach your target market. How will you manage the relationship on an ongoing basis? Then we look at channels. Where will your product be found? Will it be an online business? Will it have a storefront? And how does your customer get information? Then we look at key activities. What does it take to get your products or services to the clients, to your clients? What are your operations going to be like? Your hours of operation. Are you operating at a time that everyone's at home? Or are you operating at a time with your restaurant where it's a breakfast spot and everyone is going to be able to come in and have breakfast? What is your operations going to be like? Key resources. What will you need to operate your business? Then we look at cost structure. The cost structure is, what will your expenses be? One of the expenses I explained to you earlier was interest expense. You have to make sure that if you have your projections, you know that this will be the amount that I'm going to have to pay the bank for the financing that I'll need to start up my business. Revenue streams. How will you generate revenue streams? Now, this is a very important category because sometimes we have different aspects to our business plan. We have a restaurant, we have takeout, we have dine-in, we have online orders, we may have different locations. We need to understand, where is that revenue stream coming from? And as entrepreneurs, taking it aside from the restaurant, we tend to generate ideas all the time, and we try to lump everything into our one business. For example, we may start out saying, okay, I'm selling gift baskets. But then you have this gift baskets, and then you go into maybe jewelry. We need to understand, how much money are you making from gift baskets? How much money are you making from jewelry? each revenue stream, we need to understand where that money is coming from. So now that you have your idea, you have everything jot down, you're ready to come into the bank, understanding what types of financing is available to you is important. So the different types of financing, and this is across most financial institutions that are available, there's short-term loans, commercial term loans, government guarantee loans, revolving line of credits, non-revolving line of credits, letters of credit, and credit card. And I'll just give a brief summary of each. So when we look at short-term financing, this is to cover temporary needs. It's a non-recurrent financial need of more than 100,000, and the loans are offered in a term of 1 year or less. Then there are term loans, and this is a loan that you pay principal and interest, and it's for 1 year or more. That's considered long-term financing. Then there's government guaranteed financing. You may be new in business, and the bank may feel that the transaction may be a high risk. So they may require you to get a guarantee. And that guarantee may come from government agencies such as SBA, EDA, USVI, and they all have different programs that allow you to establish your own business, purchase an existing business, purchase land or commercial property, expand your business operations, property improvements, purchase inventory, machinery, or equipment, or refinance an existing commercial debt. When you look at the SBA program, which is a government guarantee program, it allows you to, they have programs such as the 7A regular, the PLP, 7A small loan, and these are term loans. And then there's a SBA Express, an Export Express if you're exporting goods, and term loans and lines of credit, which can be revolving or non-revolving. And if you're a contractor, there are cap lines or line of credit that may be revolving and non-revolving. So you may ask, what is non-revolving? A non-revolving line of credit covers a short-term recurrent operational need via a line of credit. This credit line generally involves a revolving instrument that are due every 12 months. For non-revolving lines, they're canceled after a period of 12 months. So for example, if you are a contractor and you have a project that will last you 6 months, you can come for a line of credit that's non-revolving. And what will happen at the end of that 6-month contract, you would pay back any funds that have been used under the line in full, or that may be turned into a term loan. And then there's revolving line of credit. This is basically used for working capital, and that rotates on an annual basis. So every year, the bank will ask for your financial statements and will review that facility. Then there are letters of credit. Letters of credit are basically for retail operations that may be doing business with a new vendor. The vendor does not know who you are. They don't even know where the Virgin Islands is. They're not sure if you have the capacity or character to repay or to pay them the debt. What a letter of credit is, in a nutshell, it's a letter that the bank provides to your vendor that says you are of good, sound credit quality. And if they ship this supply to you, upon arrival in the territory, the bank will wire or send them a check to pay for the goods. This can be used, for example, if you're purchasing heavy equipment or a boat that's being built. You can let's find out from the vendor, hey, can you accept a letter of credit? So that once you ship my goods, my bank will guarantee that this item will be paid for in full. Letters of credit can also be used for surety bonds for work as well with the government. Then there are credit cards. Credit cards basically assist you with your day-to-day working capital needs. There are credit cards that are points programs, such as the Premium Business Visa card, which allows you to separate your personal expenses from your business expenses and you have a limit anywhere from 5,000 to 50,000, and you can accommodate up to 5 persons under one single limit. Or you can have a corporate card where different persons within your organization will have a card with their own individual limits that is set during the application process. Startup Popular. Now, Startup Popular is a program that Banco Popular offers specifically to persons that are new in business. You have to be in business for under 2 years. And this allows you to get the capital that's needed for you to start operating. It also helps to promote economic development and innovation. As part of Startup Popular, we provide you financing, networking, and coaching through the SBDC program. You can get a loan up to $50,000 with lower payments in the first year. We know the first year of business operations sometimes can be a little bit of a challenge, and that's why the loan is structured so that in your first year, you have a lower payment to allow you to start operating, collect some revenues, and then the payment is increased. You also are provided a low interest rate. This loan is unsecured and it is not backed by any government guarantees. Some of the common uses for financing for the Startup Popular program, we've done financing for persons that wanted to establish leasehold improvements, purchase equipment, purchase inventory, web development, working capital, marketing efforts, and business expansions. As part of this program, you also are able to get a checking account for your business for 12 months free. There are different networking opportunities because we have several clients that have benefited from this program. We're able to provide networking opportunities that you can get advice from different persons that have been in business or have taken part of the program. You're able to establish a contact and client list. There's supplies to different events, and there's also ways to have strategic alliances with other partners. There's also educational workshops that are provided. As part of the program, we also provide coaching through the SBDC VI. Now, the coaching is because we know that within the first 3 years of owning a new business, it can be challenging. The SBDC was there to provide mentorship. Topics that you can discuss with them are marketing and sales, finance, operations, and human resources. Now, in order to qualify for this program, you have to be in business 2 years or less. You have to have sales traction. I have had persons that came 3 months of operations. So you have to have your business license already operating and starting to generate sales. You can't have any commercial debt. So if you came to the bank to acquire a loan to be able to start the business, then you would not qualify for this program. And the relevant coursework will be taking courses such as this that would qualify. In order to apply, you can go to www.popular.vi/startup. We have some templates online, which I'll show you shortly, which allows you to provide an income statement and balance sheet. We know as small businesses, sometimes you may not have the resources to have an accountant that can help you with preparing your income statement and balance sheet. So we have an easy template format that guides you through what should go in each field to complete your income statement and balance sheet. And then there's a 1-year projection that's required and your resume. So I'm not sure if you can see it clearly, but this is a sample of the income statement that's on our site where you can put in how much your revenues are and all of your different expenses, and the system automatically calculates your information for you. And the same goes for your balance sheet as well. Your balance sheet with your cash, accounts receivables, inventory, all of this information is pre-filled for you. And the form is in English and Spanish. And then there's your projections. As part of your projections, it's important to have assumptions. We talked earlier, about different revenue streams. Assumptions are very important in your financial information to the bank. I've known when I was in college, they had this statement that said, projections is a figurative of an accountant's imagination. Well, the bank wants to imagine your dream. And as part of that, we want to understand, how did you come up to the numbers? If you're, again, back to the restaurant idea, if you're stating my restaurant is going to pull in $30,000 a month, we need to understand what will your average ticket price will be, how much clients you expect to see a day. We want to understand how you came up with that 30,000, and the assumptions is important. Now, once you've filled out these templates online, you can apply by sending an email directly to startup@popular.com. And my last slide is, how do I make my application stronger? It's simple. Explain your track record and your future goals. We need to understand, where you've been, where you're going. And that information is in your pitch to the bank, as well as in your canvas, your business plan that you're going to submit to us. Use of funds need to be precise. We need to understand, what is the purpose of the funds. When you come to the bank and say, hey, I need $100,000, we need a breakdown of that $100,000. Do you have quotes from your vendors and suppliers that tell you it's going to be this cost, or are you just assuming this will be the cost that it will be? Use of funds must be precise. Projections, assumptions are important. So if you take away nothing from today's training, in order to make your application stronger and ready for the bank, explain track record and future goals, use of funds by being precise, and projections, assumptions are important. Or my direct line, which is 340-693-2750. If you need any information on the startup program, you can definitely contact me. Any questions related to our business banking or any services as it pertains to our commercial lines, you can contact me directly, or our business banking center at 1-855-756-3939. And Sharika, I will open the floor for questions at this time.
Okay, so thank you for that presentation, VP Richards. We don't have any questions in the chat right now. If persons want to unmute and ask their question directly, we will take this time for you to do so. So please raise your hand, and then we'll select you so you can ask your question directly.
Yes, I think I see a hand, Sharika.
Okay, so I unmuted the mic. You can go ahead and speak. We can't hear you as yet.
Good morning. Thanks for that presentation. It was very well done, and some good information. My question is, what is the general time frame of turnaround once all the information is presented, as far as money coming out or lending, the loan process? What's the turnaround?
Okay, the typical turnaround time for any loan under 500,000, I would say, is 30 days. We do have different programs available that can have a turnaround time of 7 days if you have an existing relationship or if it's an existing business. So the turnaround time may vary. If you have a loan that has real estate as collateral, the appraisal process can take anywhere from 4 to 6 weeks. And that would be a determining factor in the time frame. But typical turnaround time is 30 days. It could be less, give or take, based on the situation.
Thank you.
Okay, I see there's a question. Mary Jo has, are there any businesses that you don't lend to? Recently, we have not been lending to car dealerships. That is an area that we have not been lending to the last maybe 2 to 3 years. When it comes to lending, we are cash flow lenders. So if the source of repayment is speculative or conditioned on the sale of assets, that may not be something that we are interested in, but we do take into consideration all packages that are received. There any other questions?
Ms. Richards, this is Mary Jo again.
Hi, Mary Jo.
You cut out a little bit. So with the businesses that you don't lend to, you said car dealerships, and then there was a pause, and then
Car dealership. Yeah,
and then
car
it was 2 to
dealership.
3 years.
Yeah, car dealership, we are a cash flow lender. So anything that in terms of where the source of repayment is speculative, for example, if you're acquiring a hotel, because I've seen packages where someone wants financing to acquire a hotel, but as part of the projections, they have that I need the loan for 5 years, and the end of the 5-year period, the hotel will be sold. So that type of transaction is not something that we would be interested in, because it's not guaranteed that the hotel will be sold at the end of the 5-year period.
Great, thank you.
Thank you.
There's another question in the chat. Can you use the startup loan to pay off debts acquired from starting a business?
Yes, we do reimbursement for any expenses that may have been incurred during the startup process. However, we, like I said earlier, we do want to make sure that you have some type of injection in the overall project. So that is something that we can look at the numbers to evaluate.
Thank you for that. And we have one more question. Is the lending process only for businesses registered in the Virgin Islands? If you are registered as a foreign LLC, can you lend? I see you talking, VP Richards, but your audio isn't coming across as yet, so you may have to start over.
In the territory.
So VP Richards, you kind of like lagged a little, so we need you to repeat the answer to that. We didn't hear you.
Okay, yes, the business will have to be in the territory. That's fine.
Got it. I'm just waiting for more questions. I don't see any more as we speak. Okay, so I guess in the interest of time, we can advance to the next slide, and I'll give out a bit of information, and then we'll entertain any more questions as they enter the chat. So I just want to say the VI SBDC has so much more in store for USVI small businesses. You can visit our website at www.visbdc.org. Download the VI SBDC app on your mobile device from the appropriate app store. Like and follow us on Facebook, Instagram, Twitter, Google Business, and you can subscribe to the VI SBDC YouTube channel for new uploads of our on-demand webinars. Here's a preview of our upcoming trainings. We have Developing a Business Plan on April 10th at 11 a.m. And we will continue to have a financial literacy series on the 12th We have First Bank VI, they're gonna be presenting on understanding personal and business credit. On the 19th, we have them back again, presenting on establishing and repairing credit. We have Merchants Commercial Bank on the 24th. They're gonna be presenting on Small Business Accounting 101. And then we'll have First Bank back again on April 26th, and they'll be presenting on the fundamentals of business credit. So as I give that information out to everyone, I don't see any more questions in the chat at this time. So I want to go ahead and say, we encourage you once again to take a few minutes after this training, fill out the survey, let us know how we're doing. We're going to convert this presentation into an on-demand format. So all you have to do is go ahead and register once more if you want to see the presentation in full again. And VP Richards, on behalf of the entire VI SBDC network, we thank you for continuing to partner with us in these types of initiatives. And everyone in attendance, thank you for your time, and we wish you a productive day. So thank you, everyone. Enjoy your day.
All right, thank you.